Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of November, 2023, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar for the second week of November. And after last week's flurry of central bank decisions, final rally on the Friday was evident for all three of these pairs, with the euro hitting the daily 200 EMA, the cable almost reaching the daily 200 EMA, and the Aussie dollar really pushing up higher, even with the Federal Reserve's decision on the Wednesday. So all managed to find support and managed to rally at the last minute on Friday because of the US non-farm payroll report, which came out lower than expected, which is a sign of cooling off in the jobs market, which could influence the Fed's decision for next month's meeting to perhaps still hold off on raising interest rates. So that's good news for the market, and not so good news for the US dollar, and that's why the other majors all took advantage. So let's review the decisions from last week and take a look ahead for this week, because it's the RBA's turn this Tuesday. Well, first off, for last week was the Bank of Japan, and they did not make any major decisions and left basically everything unchanged, and just minor tweaks in the yield curves. So overall, it was pretty dovish for the Japanese yen. However, the US dollar was weaker after the Fed's decision and also the non-farm payroll report. So that weakened the US dollar against the Japanese yen. So that helped to push the Japanese yen up, even though Bank of Japan didn't help it at all. And on Wednesday, the Fed's decision was no surprise, no change, and it was basically another pause and stayed neutral. However, they did indicate that the next meeting in December, they could pause as well. So there's a hint that there's possibly no further rate hikes. There could be a pause for quite a while, and perhaps until the middle of next year. So the market took advantage of that news and weakened the US dollar as well. Then the Bank of England also maintained rates and didn't change, voted to stay it is, but however, it was possibly seen as a hawkish pause with potential of possible hikes if necessary, and no immediate outlook for any rate cuts. So the governor is not ready to loosen their monetary policy yet. And then on Friday's non-farm payroll report, the jobs added was lower than expected, quite significantly lower than expected, and this could be a sign of jobs market finally cooling off, and the effects of the tightening perhaps starting to show in the months to come as well. So this pushed the US dollar lower and pushed all the other majors back up after weakening for quite a while. So we'll see what happens with the RBA this Tuesday, as they are expected to increase rate after holding for 3 months now. And they're expected to increase rate as they still try to tame inflation. And no other major news with the UK GDP is going to be flat. And then late on Friday, there's the US preliminary University of Michigan's consumer sentiment figure, expect to be slightly lower than expected. So no major news for the US this week. So we'll need to watch out for the price action on the US dollar, and then how it impacts on the other major pairs. And the only central bank this week is just the RBA. And don't forget, over this weekend, the US daylight saving time has ended. Clocks will move back 1 hour. So that will affect the charts as well, your 1 hour and your 4 hour timing. Okay, so let's move back to the analysis. Let's kick off with the euro. And on Wednesday, when the Federal Reserve made their announcement, the major pairs did dip lower initially. The euro did dip below the lower trend line, then managed to recover and bounce back up. Continued its buyers on the Thursday, and then on the Friday, that's where it really made a recovery there with the weaker jobs report from the US, and blasted through the 107 and hitting the upper trend line of this channel, and just shy of the 62 pip retracement of this swing move down, blocked by the daily 200 EMA as well. And support now, there's interim support at the 106 at near the lower channel trend line. And 105 can now be a significant support here. Let's take a look on the weekly time frame, and that should be a very strong bullish engulfing candle, hitting the 55 weekly EMA. So if there's a bullish momentum to continue this week, there'll be a pullback, and it needs to break above the 62 pip and test the 108, and attempting to reach the 78.6 pip retracement here. So it needs to pull back, find support, and break out higher. We'll see if it's able to reach the 108.40 area. If the support does not hold and breaks down below the daily 55, then there needs to be support from the 106 area. And definitely from the lower channel trend line. And since there's no major news from all the major economies, it's basically just price action on the follow through of the US dollar movement and how it's going to affect the euro this week as well. Okay, let's compare this with the US dollar index, the DXY. And here's the US dollar index, where after they push up to try to break out above the upper channel trend line, just as the inverse case with the euro, where it dipped lower. Then a gap down on the Thursday and followed through weaker throughout the end of the week with the Friday's jobs report, and a strong move down to break the daily, well, to break not just the 50 pip retracement, but also the lower channel trend line. So we'll see if this is going to continue its bearish momentum and target the daily 200 EMA. Needs to climb back up and above the daily 55 if it's going to recover and just consolidate. Let's also take a look on the weekly time frame. And that's a very bearish engulfing candle, just like the opposite bullish engulfing for the euro. And let's see if it continues on down to the 104 level and below. So if it gets back down to 104, there's the rising 200 EMA, adding some support as well. This resistance, we could still leave it there, or we could leave it at this recent high, bring the support down to 104 and just below to the daily 200 as well. And this could be an interim support area. Okay, if it does break the day 200, means it's going to target the 786 retracement, similar to the euro as well. All right, so it's not unusual since it's already peaked near the 107 after climbing up for a couple of months and now retracing back down lower. Okay, let's move back to the analysis. All right, moving to the cable. And after the Wednesday's Federal Reserve announcement and decision, managed to find support of the 121. And then follow up with Thursday's Bank of England's rate decision to hold, but it's a hawkish pause there. And then the Friday's non-farm payroll report blast through the upper channel trend line. And the 123 and the daily 55 and the recent high right next to the 38 fib retracement. So we could move this as an interim resistance now, move the major resistance further up to the 62 fib retracement and the 125 round figure. So let's see where the pullback, how far the pullback is going to be, and whether it's going to target the 125. Or whether it's going to pull back even further. Let's take a look on the weekly time frame as well. And that's definitely a very strong bullish engulfing candle here. Breaking through all the recent highs and almost reaching the weekly 55 EMA, because it's almost reaching the daily 200 EMA. We can now move support up to the swing low. And also move an interim support to upper channel trend line and the 21 fib retracement, and possibly another one up here to the 38 fib and the 123. And it did also, apart from the channel, you can see that there's been a rising trend line. So this could also be a triangle breakout other than a channel breakout, which did highlight last week as well. All right, so finally finding some support after a whole month of weakness in September, some consolidation in October, finally breaking above this recent high. So no major news other than the GDP report and just minor US news. So we'll see what the price action is going to be for this coming week. Okay, let's move on to the Aussie dollar. And the Aussie dollar has finally broken through its consolidation after the 2.5 months and breaking through a significant level at 0.65, breaking out through this recent high as well, and the 50 fib retracement, which I think we can probably shift this move down to the recent low last week. And let's see, resistance could possibly at the 666 and the daily 200 EMA. Intermediate resistance possibly at the 786. Let's remove this here. And intermediate support now. At 64 and the 38 fib retracement. It could also be at the 50 fib, but there's a whole series of support here with daily 55, the 64, and the 38 fib retracement. Move this key support up to the 21 fib retracement, aligning with the upper trend line of this descending wedge. All right, so let's see if this trend will continue with, or this breakout will continue with the forecasted rate increase from the RBA next week. So there could be a continuation move first until the news is out, and then a pullback at some key psychological support at the 65. Okay, so finally there's some breakout of consolidation zones, and let's see whether there's further continuation move. So we'll just watch out for the retracement and then follow through momentum moves. All right, so do check out my other videos with spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.